Hello everyone and welcome to today's Mondac webinar in association with AG Erotocritou LLC and an expert panelist who will provide valuable insights into the evolving legal and tax framework of the Cyprus non-domicile regime, the advantages of the Cyprus International Trusts and a range of effective wealth structuring solutions available within the jurisdiction. My name is Jordan Wright and I'm joined by a brilliant speaker to take us through today's discussion. Daphne Louiso joined AG Erotocritou LLC's corporate and commercial team in 2022 and is currently a counsel within the team. Daphne's practice, in addition to private client matters, focuses on corporate M&A, growth capital and banking and finance transactions. Since joining the firm, Daphne has acted for various clients on M&A transactions, including running the legal due diligence exercises, financing transactions and real estate transactions, as well as advising on shareholders' agreements and other arrangements between entrepreneurs and the setup of new businesses. Before I hand over to Daphne to begin today's webinar, a quick housekeeping item. You can submit questions for the panel by typing them into the question pane of the toolbar on the right-hand side of your page, and Daphne will endeavour to answer as many questions as possible during the Q&A session. But please do feel free to reach out to her after the webinar for any additional information. So it is now my pleasure to hand over to Daphne to begin. Thank you very much.
Thank you, Jordan, for the introduction, and good afternoon, everyone. Welcome to this webinar around the ever-evolving private wealth landscape in Cyprus. As Jordan said, I'm a counsel at AG Erotocritou, a law firm based in Limassol, Cyprus, and I will be delivering this webinar for you today. Next slide, please. Just briefly, with regards to our firm, we cover all business law areas, and the firm has been consistently ranked as Tier 1 by Chambers and Partners for private clients and as Band 1 by Legal 500 in real estate. Of course, over the years, we have achieved top rankings in other areas of law in all known directories, including the Legal 500, the IFLR, and of course, the best lawyers. Quite a few of our lawyers have actually been recommended. Next slide, please. So just going through the agenda briefly, we'll do a brief introduction to Cyprus to give you just a bit of background, and then we look at the Cyprus non-dom regime, the Cyprus International Trusts, their benefits, the conditions to create one, and their use, and then the family offices set up in Cyprus. And then hopefully we'll have some time for Q&A. As Jordan said, please feel free to pop any questions in the chat box, and I'll try and answer as many of them after we finish this webinar. And of course, feel free to reach out afterwards with any questions you may have. Next slide, please. Now, just doing a brief introduction to Cyprus. It is a member of the European Union since 2004 and a member of the Eurozone since 2008. That gives our robust currency, the euro, and of course, we follow all EU regulations and recommendations. Going to the next point, we have a robust legal system, which is largely based on common law principles. We follow English law in most areas of law, although sometimes we follow older versions of English law. Just by way of an example, the Companies Act in Cyprus follows the Companies Act 1948 of England and Wales. We follow all equity principles and largely quite a lot of the case law from English courts. So that gives certainty as to the legal system in Cyprus. Cyprus is based in a strategic location, and it's between three continents, Europe, Asia, and Africa, which makes it very attractive for international investors who want to move their business here. We have a transparent and reliable regulatory framework, which is fully compliant with EU regulations, the Financial Action Task Force on Money Laundering, the Organization for Economic Cooperation and Development, and the Financial Stability Forum. Of course, it's very well tested, our regulatory framework, and there are a number of investment firms in Cyprus, and now we're looking more and more interest from other crypto areas following MiCA and all of that. So CySEC, which is the regulator in Cyprus, knows all about international investment, which is good. We have a strong network of professional service providers in Cyprus who are qualified to advise people. on investments in Cyprus, such as accountants, lawyers, and investment professionals. And finally, English is the main language for business in Cyprus. And although Cypriot laws are in Greek, we have seen increasingly in the past translations in English, which may be unofficial, but they're done for the benefit of foreign investors or people who are interested in coming to Cyprus. The population of Cyprus is largely English speaking as well, so the language should not be a barrier to investing in Cyprus. Next slide, please. Now, as you may all know, Cyprus has a favorable tax regime. Although I'm not a tax expert myself, I can go through the main key tax advantages in Cyprus. Just to mention at this point that there is a tax reform being discussed at the minute in Cyprus. We'll touch upon it briefly in a few minutes, but for now I just wanted to flag the main tax advantages that are in place currently. Now, it has one of the lowest corporate tax rates, which is 12.5%, which is fully compliant with EU regulations. I appreciate that the average in the European Union is around 21.3% in 2025, so that's quite low. Cyprus has double tax treaties with more than 60 countries globally, which provides a strong shelter from double taxation. This is, of course, a benefit for various reasons, whether that's setting up a trust in Cyprus or just your business in Cyprus. There are no capital gain taxes other than in relation to immovable properties located in Cyprus. This means that there is an exemption of profits realized on disposal of securities, irrespective of whether the profits and gains are considered to be of a revenue or a capital nature. Now, the word securities is quite broadly defined in the law, and it includes shares, bonds, debentures, founder shares, and other securities of companies or other legal persons, and options over such securities, which is particularly interesting. So if you sell shares in Cyprus, unless the company's only asset and its main business is an immovable property in Cyprus, then there should be no capital gains taxes. There is no withholding taxes on dividends and interest paid to non-tax residents in Cyprus, which we will look at in a bit with regards to the non-dom scheme as well. The profits of a permanent establishment on a Cypriot tax resident company, which is maintained abroad, are generally exempt from tax in Cyprus. Very interestingly, there is no wealth tax, no gift tax, and no inheritance tax in Cyprus. And as we will see in a bit, this is one of the key benefits of setting up a trust in Cyprus as well. We've got a quite new Cyprus IP box regime, which allows for a deductible notional expense calculated at 80% of qualifying profits from qualifying intellectual property. That means that only 20% of qualifying IP income after cost is taken into account for tax purposes. So just doing the math very briefly, in conjunction with the corporate tax rate, which I've mentioned, which is at 12.5%, the effective tax rate for a company which benefits from the Cyprus IP box regime is just 2.5%, which is quite low. As a way to attract international talent to Cyprus, they've set up a new scheme which applies to first employment commencing as of 1st of January 2022, which is exercised in Cyprus. If you get a remuneration of more than 55,000 euro annually, then there is a 50% exemption on tax payable. Of course, there are certain conditions which are attached to this. For example, you have to be for at least 15 consecutive years prior to commencement of the employment, you cannot have been a resident of Cyprus. And finally, there is 100% exemption from personal income tax for remuneration earned from an employment exercised outside of Cyprus for a period of more than 90 days in aggregate in a tax year for a non-Cyprus tax resident employer for any permanent establishment of a Cyprus tax resident employer. Of course, these are all in addition to Cyprus' general tax benefits, both on a personal and a corporate level. If you can go to the next slide, please. As mentioned a while ago, there is currently a proposed tax reform going on in Cyprus. This will, of course, need to go through a public consultation, and once that process is completed, the Ministry of Finance will prepare the bill that will be submitted to the House of Representatives for voting. I'll go through some of the proposed changes, but just to mention that some of the measures may take effect as of tax year 2025, while some others might take effect from tax year 2026. So what are the main changes? They're proposing to increase the corporate tax rate from 12.5% to 15%. As mentioned, this is well below the average EU corporate tax rate still. They are considering to abolish deemed dividend distribution rules, to reduce the special defense contributions from 17% to 5% for dividends, and from 3% to 0% for rental income. They are going to maintain the current personal income tax rate, but they will increase the bands. And any other tax advantages are going to be maintained, including the favorable tax status of non-doms, which is not affected by the looks of it by the proposed reform. Next slide, please. So the Cyprus non-dom regime, this is one of Cyprus' biggest benefits at the minute, especially now that they're looking to abolish or at least fundamentally change the non-dom regime in the UK. We're increasingly see many individuals looking at the Cyprus non-dom regime. There are some very key tax benefits which we will look we will look in a second, which are to be enjoyed for 17 years if you do get the non-dom status. But before we delve into the criteria and everything, so the definition of the status of domicile in accordance with the wills and succession law, there are two ways to define your domicile. We've got the domicile of origin, which is usually the domicile received at birth. For a child's birth during his or her father's lifetime, the child's domicile is the father's domicile at the time of birth. Now, this is what's stated under law. Having seen from experience, there are certain circumstances under which the mother's domicile is taken into account, but this is a separate point. And the alternative is the domicile of choice. So it's domicile which has been acquired by establishing physical presence in a particular place and by demonstrating sufficient intention to make it the place of permanent residence. This is ultimately a question of fact, and it needs to be deemed under the specific circumstances of each individual. And just to mention that a person's domicile of origin is a domicile which is valid until a different domicile of choice is obtained. So we all have our domicile of origin, and unless that's changed, that's the one that's taken into account. Next slide, please. So what are the eligibility criteria? The non-dom status can be enjoyed if the relevant individual has not been a tax resident of Cyprus for a period of 20 years prior to 16th of July 2015, and it satisfies the following conditions: to stay at least 60 plus days in Cyprus during each calendar year, and not to stay 83 plus days in any other country. They have to rent, buy a house or flat, demonstrate economic interest in Cyprus as the law stipulates, and not to be a tax resident in any other country. Now, in terms of economic interest, this generally means to do business in Cyprus, such as working or being employed, or holding a position such as a directorship in a Cyprus company. Equally, in certain circumstances, you can start your own company and have an employment contract with that, and that should be sufficient to show economic interest in Cyprus. Can we please go to the next slide? So certain key benefits, tax benefits, which are in addition to the tax benefits already discussed, and which, as mentioned, are to be enjoyed for 17 years. There are no withholding taxes on dividends and interest paid to non-tax residents, and this benefit applies even if dividends and interest are sourced within Cyprus. And then dividends and interest income is exempt from special defense contribution tax, which is otherwise payable, and it ranges from 17% to 30%, depending on whether it applies to dividends or interest. Now, moving on to the next slide, we'll look at the Cyprus International Trust. This is a new vehicle which has been set up by way of law under the Cyprus International Trust Law 1992, which has been amended since then, and it largely follows UK common law principles of equity. Overall, Cyprus International Trusts are very commonly used in Cyprus, and it's a very well-known vehicle, especially for high net worth and ultra high net worth individuals, which are not resident in Cyprus, and I'll explain why in a second. Cyprus is in general a preferred jurisdiction for trust creation, given the common law system, the non-language barrier, and of course because there is a clear trust framework which is recognized globally. Now, what are the conditions to be able to set up a Cyprus International Trust? The settlor, whether a legal or natural person, must not be a resident of Cyprus during the calendar year preceding the year of creation of the trust. Equally, the beneficiaries of the trust, whether legal or natural persons, must not be residents of Cyprus during the calendar year preceding the year of creation of the trust, with the exception of charitable institutions. Now, here there is just a slight exception that if the beneficiary is a charitable institution, it can be, under certain circumstances, a resident institution in Cyprus. And finally, at least one of the trustees must, throughout the lifetime of the trust, be a resident of Cyprus. The interesting thing to note here is that while the conditions for the settlor and the beneficiaries is a look-back period of the calendar year preceding the creation of the trust, the requirement of the trustee is to be a Cyprus resident throughout the lifetime of the trust. Now, this means that if the settlor or the beneficiaries become residents of Cyprus after the creation of the Cyprus International Trust, then in general, that should not be a problem. Having said this, in terms of the settlor, we need to be careful that we don't make any material changes to the trust after the settlor has become a resident in Cyprus. Otherwise, there might be an issue as to whether a new trust has been created, and therefore it won't comply with the conditions, i.e. that the settlor has not been a resident of Cyprus during the relevant time. Next slide, please. There are a number of benefits that Cyprus International Trust provide, which otherwise other trust setups do not quite provide. Now, looking first at asset protection. The Cyprus International Trust generally serves as a shield for safeguarding assets against various risks, including potential claims by creditors. Additionally, many countries have the forced heirship regimes, including Cyprus, and such foreign succession laws on trust do not apply to assets which have been included in the Cyprus International Trust. Now, that's with some caveats. Of course, the trust needs to be validly created, etc. But in general, that's a great benefit. Additionally, it provides a protective barrier against claims from spouses or former spouses, and from future claims arising from tort or contract disputes stemming from transactions initiated by the prior owner of the trust property. Most importantly, it may include all kinds of assets and property, irrespective of whether they are located in Cyprus or elsewhere in the world. So, in summary, such assets do not need to be in Cyprus to be covered by Cyprus International Trust. Now, confidentiality and reporting is a quite interesting subject for trusts, and quite a lot of people create trusts for confidentiality reasons. Under this regime, the trustees are bound by strict duty of confidentiality towards both the settlor and the beneficiary. They are prohibited from disclosing any information or documents related to the trust, to the settlors or the beneficiaries, unless they are ordered to do so by a specific court order or a specific legislation. Now, while registration of a Cyprus International Trust in the Trust Register is obligatory, This process does not entail the submission of the relevant trust deed or the details of the beneficiaries, and it's not open to public. So it maintains its confidentiality. The Cyprus International Trusts are not subject to any reporting requirements in Cyprus. Now, looking at managing family wealth, estate planning, and inheritance planning, such trusts offer an ideal solution for high net worth individuals, particularly who are seeking strategic asset planning, particularly if they've got extended or complex family arrangements. So the way the trust can provide very good estate planning, inheritance planning solutions, which are used vastly. Now, in contrary with local trusts and other setups, when setting a Cyprus International Trust, the settlor can reserve certain powers to themselves. Those powers need to be expressly included in the trust instrument itself. Now, such powers may include the power to revoke, alter, or amend the terms of the trust, appoint or remove a trustee, enforcer, protector, beneficiary, investment advisor, or to provide limited instructions to the trustee. Now, this reservation of powers need to be very careful because you need to. You need to be very careful because if you give them too much power, then there is a risk that the trust may not be valid. So while they can reserve some powers for themselves, they need to be used wisely. A Cyprus International Trust may continue in perpetuity. The equitable rule against perpetuities, which is applicable in other trusts in the jurisdiction, it has been excluded under law. So they can run in perpetuity. And then just to look at a few tax benefits, some of them we've already mentioned them, but they're more relevant for trusts. Any worldwide income, gains, and profits are taxable in Cyprus only if the beneficiary is tax resident in Cyprus. Otherwise, they are not. Income gains and profits from sources outside Cyprus are exempt from taxes in Cyprus. Beneficiaries who are non-tax residents in Cyprus, which means residents means to live at least 183 plus days per year, are taxed on income sourced within Cyprus only. And dividends, interest, or royalties received by a Cyprus International Trust from a Cyprus-based company are exempt from taxation and are not subject to any withholding tax. As already mentioned, which is probably the most important and interesting point, is that Cyprus does not impose estate duty or inheritance tax, which provides quite a lot of additional advantages for individuals utilizing Cyprus International Trust. Now, can we move on to the next slide, please? Using family offices in Cyprus, there are a few ways to create this structure. More generally, a family office is set up by individuals, a family, or quite a few families together who decide to set up a family office together in order to provide wealth management, investment services, or other services I'll just go into to such individuals and their families. And usually it's to promote the generation of more wealth. The services that can be offered, they can include investment management, tax planning, estate planning, family arrangements, governance, etc. The other activities can include real estate acquisitions, investments, corporate and private equity deals, or even family matters such as family administration, management of the companies, management of luxury assets such as yachts and jets, and management of the properties. So there are a number of potential structures that can be used for a family office to be set up in Cyprus. We've got the limited liability company, which is very easy to be set up in Cyprus. It's a flexible structure and it offers limited liability protection. This is ideal for safeguarding family wealth. This can be also the basis for an alternative investment fund or a registered alternative investment fund. Both are regulated by the Cyprus Securities and Exchange Commission as the regulated funds. Which takes me to the next point. A family office can be comprised of regulated funds. While it's quite easy to set up a regulated fund, it needs to be authorized by the Cyprus Securities and Exchange Commission. So there is certain process to be undertaken. But for certain investment activities, having a regulated fund is absolutely necessary. We've got the companies limited by guarantee, which are more appropriate for charitable activities. We've got companies limited by guarantee both with and without share capital. So a decision needs to be made as to which one is the best structure to be used under the circumstances. The important thing to note about these companies is that the only way to distribute the actual assets to beneficiaries is to proceed with a winding up of this company. So it's quite difficult, essentially, to distribute assets. So if we want to be liquid, the assets to be liquid, then the structure is more rigid. We've got, of course, the option of trusts, and Cyprus International Trust, as already discussed, is a very useful vehicle to work alongside a family office because the assets can be transferred to the trust. They will be managed by the trustees until certain time is met. And of course, we've got the foundations. They manage assets dedicated to specific non-profit objectives, such as charitable activities or succession planning. The specific choice of a structure, it really depends on the client's ultimate goals and aims. So whether it's more for succession purposes, if it's for planning for investment management purposes, if it's for family purposes. So we need to be very careful which structure is used to ensure that it does help with the client's objectives. We've got vast options, so we just need to make sure that the right one is used. Next slide, please. Now, you may ask yourself why set up a family office in Cyprus and not elsewhere. Other than the tax benefits that quite a lot of those do apply to family office structures as well, it's interesting to note that Cyprus has highly skilled staff to employ. 40% of the working population in Cyprus has a degree of higher education, and Cyprus has a very good education system. So staff to be employed here are largely well educated. Given the number of structures that we've just discussed, it's quite simple to set up a family office. The only structure that requires to be regulated and requires authorization is the investment funds, which require to be regulated by CySEC, and therefore CySEC needs to authorize them and license them to operate in the jurisdiction. The owners of family offices and potentially their relatives can take advantages of the non-dom status that we've discussed, given that they have not been residents in Cyprus in the past, and they've got all the other tax advantages that we've just mentioned. Foreign investors in Cyprus are not restricted with regards to the business they choose to conduct. We've got a reliable and secure banking system, which is, of course, monitored by the EU. And of course, setting up a family office in Cyprus gives you access to the EU market. So in addition to all of this, other benefits that we can mention for Cyprus is that there are a number of schemes currently in Cyprus that help people to obtain a permanent residency. So there are different schemes for investors or highly skilled individuals who want to work in the jurisdiction. For example, for investors, the purchase of a first house or apartment from a development company with a minimum value of €300,000 plus VAT may entitle you to apply for a residency in the jurisdiction. Equally, an investment in a Cyprus company with business activities and personnel in the Republic with an initial investment of €300,000 in the share capital of such newly registered company, or an increase of €300,000 in the share capital of an existing company registered in Cyprus, provided that the company has a physical presence in Cyprus and employs until at least 5 people, then it may entitle someone to apply for a residency. The above are just for investors and assume that neither the applicant nor the family members intend to work in Cyprus or receive any salary. There are different criteria to obtain an EU blue card, which is for highly skilled employees. Now, with regards to citizenship of the jurisdiction, Very generally and without going into the details, following 7 years plus 12 months of permanent residency in the jurisdiction, a holder of the residence permit is entitled to apply for a Cypriot passport, of course, subject to certain conditions being met. During the period of the 7 years plus 12 months, the applicant cannot have left the jurisdiction for long periods of time, and there are specific timeframes that they can be abroad. So I think, next slide, I think that was everything for me. I can see that there have been some questions. I'll try and cover as many as possible. Now, we've got one here with regards to family offices. Is there a specific regulatory regime in Cyprus? The answer is no, except with regards to the investment funds, which are regulated by the CySEC. Any other structure, there isn't a specific regime in Cyprus. Now, with regards to the proposed tax reform, one of Cyprus' key benefits is the low corporate tax rate. Why is it being proposed that the corporate tax rate is increased to 15%? That's a very good question. I mean, I understand that there has been a great detail of discussion behind the reasoning of the tax reform, and it's to comply fully with EU and OECD regulations. Although the corporate tax rate is proposed to be increased slightly, my understanding is that there are other incentives, such as for green investment in the jurisdiction. Another question: what does Cyprus offer in comparison to other private wealth hubs, Malta, Luxembourg, etc.? So, I mean, although I cannot speak in detail about the other jurisdictions, I think the benefits that we've just run through, including tax benefits, the favorable regime for obtaining a residence in Cyprus and potentially citizenship, the regulatory framework in Cyprus, is quite straightforward and quite beneficial. And I believe that's why a few people choose that. Now, in terms of Luxembourg, although it is a hub for funds, given that it's in Central Europe, it doesn't follow common law. So the legal system is quite different. So quite a lot of people do choose Cyprus for that very reason. Now, how is fintech influencing the way private wealth is managed? I'm not sure. I mean, I'm not sure who sent this question, but if you mean how the fintech business is influencing Cyprus, there have been quite a lot of investment in Cyprus around fintech. And we've seen quite a few overseas business relocating in Cyprus, both the business and their employees. Quite interestingly, in the last couple of years, we've seen in Cyprus a relocation of a few thousand people as a result of the business relocation schemes that we've got in Cyprus, and they are largely fintech businesses. What role does Cyprus compliance with EU and international financial standards play in shaping its appeal to high net worth individuals? I think the compliance with EU and international financial standards provides some sort of certainty to people. So they know that if they come to Cyprus, they've got that backdrop of the EU, which is regulating and checking. So there is no way that, for example, regulation would change overnight in a detrimental way. So having that backdrop of, you know what, we comply with EU standards, with international standards, that provides some comfort and protection to high net worth individuals and investors in any case who come in Cyprus. There's a question, what does abolish deemed dividend distribution rules Currently in Cyprus, companies do have to distribute dividends at least every 2 years, and that's something that they're looking to abolish in line with English law. Now, no withholding taxes on dividends and interest paid to non-tax residents. What does it mean in practice for those who are non-dom, not non-dom? Are these dividends not taxed anywhere always? I mean, I think the question is, are these dividends not taxed anywhere, or will they be taxed in another EU country? My understanding is that I mean, as I said, I'm not a tax expert, and I guess that's a question for the relevant jurisdiction as well, whether they will be looking to tax dividends and interest abroad. But in terms of Cyprus, those are not taxed here. There's a new question. How flexible is Cyprus law in accommodating cross-border asset protection strategies? I mean, that's quite good. And in fact, the setups of the Cyprus International Trust does provide cross-border asset protection. And in very few, I mean, there is a specific case law, but in general, the assets that are within the Cyprus International Trust framework, they do provide, they do have protection against cross-border litigation in general. So I don't think there are any other questions at this moment, Jordan. I don't think I've missed any of them. Let me know if there are any others, please.
Yes, I think you did reach all of the questions there. Now, if there are any of the attendees that do have any further questions, or if there's anything you would like to speak with Daphne about, please don't hesitate to reach out to her at any time. And on behalf of Mondak, I'd like to thank Daphne and everyone at AG Erotocritou for being our guests here today. And we look forward to welcoming everybody back to another webinar sometime in the very short, very not distant future. So thank you all, and I hope you all have a great day.
Thank you, everyone, from me as well. And if you've got any questions, please do feel free to reach out to us. We would be happy to answer any questions you may have following up from this webinar. Thank you, Jordan and Mondak.